Hi everyone. Today I want to talk about something a bit different, my personal philosophy on options trading. I love trading options and I often price my bets based on macro analysis and structure modeling of the market. Now, people often say that options are complicated, but to me, they are not that hard, at least not the way I do it. If anything, I hope this episode helps to show that you can approach options in your own way. First off, I only buy options. I don't sell them. And that means I only go long either calls or puts, depending on the setup, never both at the same time. And sometimes I've tried buying both sides, but in my experience, it rarely works out. So, what I will share today is purely from the perspective of an option buyer. And yes, and to be honest, I do see options as a kind of the gamble, but not just any gambling. To me, options are the most intelligent, numbers driven, and fair kind of gambling humans have invented. The odds can be stacked in your favor if you have structure and strategy. And let me explain that through something I love football. And think of the cash equity market, individual stocks, index as the players on the pitch. Option trader, we are spectators in the stadium. We watch a game and price bets based on what we see. You can't just watch the crowd and expect to win. You need to watch the actual players, how the market moves, where the momentum is building, who's leading the play. Focusing only on option data is like staring at the spectators instead of the game. This perspective is really important. It's the same as the movie The Big Short. The real market event always starts in the core asset, not in the derivatives. Options are just the outer layer reacting to that. So that's my first principle. Always observe the cash market first. The second thing is time value. Unlike stocks, options has expiration dates. If a player loses today's match, they get another chance next week. But in options, if your idea does not play out before expire, it's worthless. So timing is everything. You have to enter just before the goal is scored. Not too early, not too late. If in football you often see signals before a goal, player losing focus and fatigue, tactical breakdowns. In markets, it's similar. Subtle changes, shifting volume, IV starting to rise. And so many second principle, watch for micro changes, lead the game. The sad things, markets look random, but there's not. Just like football has recurring patterns, common ways teams concede goals, a market have rhythm too. I'm not saying they repeat exactly, but they rhythm. And some patterns show up more often before big drops. Certain time frames, structure, sequence. If you study the past, you start to see the market habits it starts. So my third principle, study the past, identify the market behavioral patterns. In short, my approach to options is built on three things: macro level observation of the market, micro level sensitivity to small changes, 3. Patterns recognition from historical behavior. These three allow me to bet not randomly but intelligently with purpose. Yes, it's still gambling, but it's disciplined, educated, almost philosophical kind of the gamble. And that's why I love the option market. Thank you for listening. If you like new to options, if you are new to options, I recommend it. Starting with buying, not selling. There's enough risk already. See you tomorrow.